There are two types of investors, retail investors and institutional investors. As the name implies, retail investor, it's an individual. Institutional investors, it's for companies, people who have built companies and they're ready to come into the market. We're having that conversation on this episode of Market Watch, brought to you by Nairametrics Television. My name is Frank, and one of the major issues is the fact that we're experiencing a rise in institutional investors on the NGX. And then that is having a cascading effect as regards rise and dump. We're going to have that conversation regarding rise and dumps. And then we have a result that is out, Q3 result. Transcorp Hotel, result out. Ikeja Hotels, Q3 result 2025, unedited, unaudited result is out. And all of these conversations is what we're going to be taking a look at. And then the all-share index, inflation numbers out. We're going to be taking a look at how inflation would affect the equities market. You know that I don't come here alone, but there's something different this time around. We have a new man in the block. I don't want to say a new kid in the block. Let me start with him. Mr. Chiki, you're very much welcome.
Thank you so much
to this episode.
Thank you so much. Good to be here.
Yeah, for those who don't know him, the managing editor of Nairametrics. And then we have Idika Ajara, the man behind the articles, and Mokhtar Mohammed, the man after his own portfolio. Any other thing can be happening. But please,
matter. They don't touch his portfolio.
Don't touch my portfolio.
Okay, let's start with what is happening regarding rise of retail investors. Personally, something that excites me, and when I see retail investors coming into the market, what's your take about that? Rise of retail investors.
For me, I was excited about. I'm still excited about retail investors, especially when the market was going through those times, especially the first 8 years of President Buhari. Retail investors were really the one that kept the market afloat. And those 8 years were very challenging years for retail investors. And that's when we started seeing the retail investors. Remember, those 8 years was when the institutional investors and foreign investors left the Nigerian market, and the retail investor took over that market, and they have been there since then. And I'm happy for those retail investors, because when President Tinubu came in, they were able to have a gain on their long suffering after 8 years. So for me, retail investors, for me, what even make me excited about the retail investors again is because they are mainly Nigerians.
Yeah.
So they own, it's like taking ownership of your own economy.
Very true.
Believing in your own economy rather than what we had before, when we have about 80% or 70% foreign investors. When our oil price goes down, you see those heavy escape route, and then the price keep crashing and people say the market has crashed. But when you see retail investors, they are out there for the long run. Though there are little challenges with retail investors. Retail investors are not going to be there for a very long time, because again, they are retail. They see opportunity, they come in to make money, and also they have needs. They still come to the market to trade up, to meet up their needs. Let's be clear, retail investor is different from trader.
Yeah.
It's different from a typical investor. It's different from speculator. But the retail investor is someone that's looking at the market as a place to build wealth, to use wealth, to sustain wealth, and also to be able to grow wealth in the long run. So those are what excites me about the retail investors, is how much of them we've had, and the fact that over 100% of them are Nigerians.
It will surprise you to know that a lot of our viewers are retail investors. But I would love to hear from Idika Ajara. We're having a massive rise in pump and dumps. And for those who don't understand, you see the market, a particular stock just spike, goes up, and then all of a sudden it comes down. Let's talk about that. What is the difference between regular market movement and pump and dumps?
Okay, thank you very much, Frank. Well, the regular movement, at least, is when there is change in price of stock, at least based on factors that you know very well, maybe market sentiment, earnings, and so on. But pump and dump is a situation where you see a spike in the price of a particular stock, basically being manipulated or being managed, being micromanaged. So you see it spike and maybe controlled by the substantial shareholders of the company.
Yeah.
And at times when it happens, they know they can sweat the stock. When it goes up, they can now pull out. And for retail investors, if you don't understand these stocks, you might likely lose money.
What do you think are the red flags, Chike? What do you think are the red flags for pump and dumps? What should you look out for when you see them?
Well, for me, the red flags are probably you're looking at for me, the red flags, you look at companies that, their fundamentals might not be so great, or not so great, but you just see, a spike in the share price.
Yeah,
you don't know what's driving it. And also, you also find out sometimes with some of these companies that, that are not very liquid, and then they are in the hands of a few. They control a few people. Individuals control a majority of the stocks or the share price. The shares of those companies.
Very true.
So easy for them to manipulate it and determine where they should. So probably if you are faced with situations like this, the fundamentals are not great, and you see it going up, and then the shares are being controlled. So for me, I think that's one of the things to look out for. Like, you need to be very careful.
Let's discuss extensively about that. And are you a fan of pump and dumps? Do you is this something that you always look out towards? And what's your advice for people who play in that space and retail investors?
Like pump and dump, like you said, mostly are being driven by speculators. The speculators are the ones, it's either you're a speculator, you see them in the pump and dump, or you are the large shareholders are normally the ones that are in the pump and dump. So speculators and large shareholders, they are there. So you can't find people like me there or Indica, the fundamental man. I don't know about Chike. Maybe it's a speculator. You can find him there. But basically, there's a slogan I always say if you're in the market. They said you make money during the bears, you make money during the bulls. But they said both the bear and the bull market, people make money. But the pig gets slaughtered during the bear market. And whether during the bear market, the pig gets slaughtered. And they said, who are those pigs? Those are the pigs that catch the knife during the bear market and they are out and join the train during the bull market. So for me, that's my slogan. So I don't want to be a pig that will get slaughtered in the pump and dump. So I'd rather be where I can make money, either in the bear or the bull market. And the best way you can make money in the bears and the bull market, you don't have to be a fan of Indica at this time. Fundamentals are keys. Liquidity are key. We talked about this on one of our episodes, that the key determining factor of a price of a stock should be the liquidity of that stock. And what we have seen in the pump and dumps, like I've said, is largely driven by speculators and owners. And this owner largely control sometimes up to 95% of those shares. And so they are able to you see some artificial movement.
Very true.
And when you get trapped in between, then you become the pig that will be slaughtered. So for me, don't be a pig for these people to make money, and don't jump into the falling knife or join catching a falling knife or be the one to join the moving train. So we need to see, that's why it's good to have education on what really drives stocks. What are the fundamentals? In Nigeria, ordinary should be easy because Nigerian investors are dividend crazy investors.
Yeah.
And if you look at some of this pump and dump, you realize that some of them for 5 years, some of them were even suspended, and immediately they come to the market, the price just start going up. A stock that was out of the market for almost how many years, and I don't want to name the stock. Then after
we'll have to get to that.
After the stock was just readmitted into the market, it moved from whether is it a pump price or a dump price of 20 kobo.
Yeah.
And we were saying it's selling at 1 naira 50 kobo. Wow. That has also a potential, what do I call it, a legacy fund that is supposed to deal with about 50 billion in losses. And yet people were just jumping into it because it's coming from a suspension and it's being relisted. So, Warren Buffett said said that during the bull market, a lot of things happen. A lot of things happen during the bull market. But what's determining whether a stock is strong or weak is the bear market. So because the bear market will bring out what is bad about the stock, and then the bear market will bring out what is good about the stock and create opportunity for wealth transfer also. Because we keep saying that the patients definitely make money from the impatient, but you don't see that happen during the bull market. So it happened during the bear market. So I think we should not be among the dumb. We should also look at fundamentals, and that is why always try to get to Naramatics TV, where these numbers are being brought out, or like you call it, the man behind the numbers doing the write-up.
So the man behind the numbers, I would love to ask you, what do you think investors should do? What should investors do to protect themselves from this whole pump and dump?
Yeah, thank you very much, Frank. That is a very good question. First of all, you have to look at the characteristics of pump and dump stocks.
Yeah,
they have their features, and you need to understand that so that you'll be able to protect yourself. And one key thing there is that for the pump and dump stock, they have low trading liquidity. That means, like Mukhtar really pointed out, it doesn't make sense that you go into a stock that you know you cannot easily go out. That's very, very key. And that is one of the features of pump and dump. They have low trading liquidity. And for me, any stock that is trading, is not trading up to, maybe, let me put it conservatively at maybe 5 million shares a month, it's not for me, because I have to go in and I have to go out. So one of the characteristics of pump and dump stock is that low trading liquidity, and you have to watch out. You have to watch out. Then the second one is, of course, he mentioned it technically, which is the free float requirement. According to NGX rule, I think rule 12.2, if you go down, you see the requirement for any stock to be listed on the premium boards. At least you must have 20% of your issued share capital out for people to trade, or equivalent of about 40 billion in value.
Oh, okay.
So if you check the stock, it's always there in their statement. They'll write it. They'll tell you either they are in compliance with the free flow requirements or not. So for investors, especially retail, and I know the institutional investors, they know about this, and they have the way with that to even check they have analysts that can check it for them. But for the retail investors, you just go to that statement, look at free float, those ones that are in compliance with free flow requirement. Because if they are not in compliance with free flow requirement, that means the shares are tightly held, and they can easily move the share price. And of course, the third one, you look at market cap versus performance. It doesn't make sense that your market cap is about 5 billion, and meanwhile you are making a profit of you have a profit about maybe 100 million. You see the spread.
Yeah, true.
Or your net assets is about, maybe it's not even up to 1 billion. So there is a disconnect between your market cap and your performance. Then, of course, you check the conventional spike. You have been trading on, maybe on average daily, about 250,000. Suddenly you see a spike of about 66 million. It's a red flag that something is wrong. So like Mukhtar really pointed out, it's just a matter of I want to make profit. Yes.
And the red flag always comes that 600 will not make that stock become a bullish stock.
Of course.
That's
yes,
what,
of course.
and ordinarily, if supply was low before and it was bearish, and supply becomes more, it's supposed to be more bearish.
Yes.
Yeah, true.
But rather, you will not see at that period, you become more bullish. You are even struggling. So that is where you become the peak. You go in And the slaughter.
For instance, look at 2024, Julie PSC, I think one of the best performing stock in 2024.
Yeah.
With over 1,600 year to date gain in 2024. Now this year, how far? He has done maybe about 26% year to date. Do you see the disconnect?
Yeah, there's a disconnect in Julie Pharmacy, but Indika, don't forget that's one of the oldest company listed in the exchange.
Yeah, it's okay.
So that could also be working for him. One of the only pharmaceutical company listed in the exchange.
Yes.
That is it again. But again, bottle your part. Sometimes you look at Julie. When last the Julie Pharmacy paid dividend? What is Julie Pharmacy? Julie Pharmacy now have a lot of competitors now in the pharmaceutical sector. It has not been a company that have moved from pharmaceutical, just normal chemists, to maybe production of like the liver.
Mercure, fishing, and so on.
So you have not really left that space.
But what I'm saying is that the growth in 2024 is much.
Yeah, those growth is like, but you also like your write-up said it. You also look at that spike. And that spike, and then the volume, and who drive those volume, and how many percentage are being held by people in terms of Julie Pharmacy. Who is the largest shareholder? Who drop off those stocks or to this one? Julie Pharmacy, as it stands today, should not be selling at the price it's selling. I'm saying it as it. Just like what I was saying, the other stock I was trying to say was ASU Savings and Loan.
Yeah. Oh, yeah. ASU Shares.
ASU Savings and Loan.
Yes,
a company that had not released result for over 5 years, was suspended by the exchange. All of a sudden, they came up with their 5 years result, all losses, listed in the exchange. Within 1 week, it grew by almost 50% to 60%. So how do you quantify that? Speculators. So we must.
Yeah, I agree with you. Even NCR Nigeria that is doing, I think it's the most performing stock right now with about 519% year to date. Right now, but and one. They have the free float. They are in compliance with free float. That one, give it to them. They're in compliance with free flow requirements. They have it. But if you check the trading volume, on average, they've been trading about 250. But in September, I think in October, they had one about 66 million from that average trading volume. So I'm not saying that, yes, it could be one of them, but I'm just giving you an example of some of the stock the reasons why you should watch out. Because if you look at it, okay, I've been trading on average 200, 300, suddenly there is a spike. I'm trading more than 1 million, 2 million, 66
million. And I agree with you again. Sometimes again, we have to look at which line of business they are.
We have a lot to talk about regarding pump and dumps, but I would love us to take a look at the results. They are out now. Transcorp, 1. Ikeja Hotels, 2. These are major players in the hospitality industry, and their Q3 unaudited results. What do you think about this result? Looking at, if you try to look at the operational efficiency and also looking at their pre-tax profit. Let's have that.
If you are comparing two of them, Transcorp and Ikeja Hotel, in terms of scale, market share, Transcorp has it, which has been reflected in their revenue, in absolute numbers, profits. But when you are comparing companies, it's not only about the volume, the scale, how much we are making. Equally have to find out, because if you are not efficient, and it equally impact on your bottom line. Now, looking at Transcorp and the Ikeja Hotel, Ikeja Transport is much larger than Ikeja Hotel.
Absolutely,
in terms of revenue, even in terms of profit. I think when it comes to cost management,
both of them are profitable.
Yeah, well, of course, absolutely, they are profitable. With good margin.
Yeah.
But we are trying to see, okay, which
comparison.
One? Frank, you have money, but how do you manage yourself? Even though you have money, do you manage yourself better than I do? So that's the concept, that's the idea. But when you look at them, based on their 9-month result, Transcorp is doing better in terms of scale, their revenue, their profit. But when it comes to efficiency, especially the midline and the bottom line, Ikeja is doing better when you look at their operating profit margin and pre-tax and post-tax margin.
Yeah.
So that one is doing better. That means it shows that, okay, fine. For every 1 naira in revenue, I can return about 42 kobo from it. Compared to Transcorp, that's for every 1 naira in revenue, maybe they're returning about 34 kobo.
Yeah.
You can now see that efficiency, and which is very, very important for investors. So, okay, fine. I can control my costs. I can make money from my revenue.
Chike, what do you think? Transcorp, is it overvalued compared to, and also do you think Ikeja Hotels is undervalued based on these numbers?
Well, like Idika said, based on the performance, of course, in terms of absolute numbers and then the scale, Transcorp is, I think is higher up there. But in terms of efficiency,
Transcorp's PE ratio is 91.
Yeah, it is.
X.
91x.
And then Ikeja Hotels, to give you context, is 3.9.
Yeah. So that means for me, I think based on their efficiency and then the numbers, I think Ikeja Hotel, is undervalued because there is still, a whole lot more room for, improvement. I think maybe it has more to do with investors' sentiments, and then probably the outlook, the growth potentials of most of the company. With the two companies. That's what I feel.
Yeah.
But I think Ikeja Hotel is highly undervalued, and I think it's something that investors, I'll advise them, probably to look at based on the fundamentals and the numbers.
He's saying that investor sentiment. What's your sentiment? Well, what's exactly growth and value?
You see, Dika wants to get me off balance. So let me, you see, I always say something.
Yeah.
It's depending on the kind of investor you are.
Yeah.
That is when you know whether a stock is undervalued or overvalued. For me, you look at it as an investor, whether you're an investor, whether you're a speculator, or whether you're a trader. Now, if I am an investor, Ikeja Hotel is undervalued. Now, not just undervalued because of his market, his profit or whatever, earning per share or PE ratio. No. If you look at that price compared to Transcorp, but don't forget again, Transcorp, I think, got there through some Transcorp at the point was almost at par with the Ikeja Hotel. But all of a sudden, it's back. Then when you look at their numbers, you see that there are similarities in terms of where their larger profit comes in hotel room. That's where they make them, and that's their key area.
Yeah, true.
So you look at that. Now, as an investor, I think Transcorp Hotel is about what the price again?
Ikeja is 20 naira.
And Transcorp is about, is it?
Transcorp is 174.
Exactly. 174.
Yeah.
So if I am an investor, how do Transcorp move from 174 even to 200 naira? How does Ikeja move from 20 naira to 25? Naira. 25 naira. I mean, to 25 naira.
Yeah.
Who makes, you understand?
Yeah.
I will make more money.
Very true.
By investing in Ikeja Hotel.
So I'm going to ask a general question before we go to the next one. Do you think the dirty December that is forthcoming would have a massive impact in the hospitality industry?
Look, there's too much competition there.
Do you think so?
No.
Well, it depends on
what you think?
It depends on where.
Exactly.
Okay.
Again, for the Lagos market,
Lagos market,
it's going to be crazy. Like,
Ikeja Hotels obviously is Lagos.
Yeah, but I don't know much about.
No, for Ikeja Hotel, but again, you have to look at Delhi December. Does Ikeja Hotel have a branch on the island?
Yes, they do.
It's not only.
So that's one.
Yeah.
Secondly, but when it comes to Delhi December, you realize that 90% of them take Airbnb.
You know
And
what?
so that is one area that
Airbnb, yes, it's come. I think what Airbnb is that it closes the gap.
it closes the gap.
Because if I understand what happened
Because
last,
the demand is
if
way
you check what
outrageous.
happened last December,
Yes,
and
please
I
tell us.
suspect that this December probably is going to be a whole lot, if I can use the word worse. If you check, most of the hotels last year were fully booked up until you will struggle to get any of the top hotels. Most of them were fully booked. So I think the Airbnb, what Airbnb does is to close the gap. Because
Yes, but again, if this, one strategy that most of these hotels should make to also should be them vying to the Airbnb context, because some of them, that's what you see when you get to places like Dubai.
Yeah.
Major hotels are doing Airbnb
Yeah, sure.
right there. So I think that's one area that we have not seen in Nigerian large cap hotels doing Airbnb. Because again, that's the new normal. Nobody wants to go and get a small room and you have family of 4, 5. You want to be together. You want to be together in one area, maybe. You get what I'm trying to say.
True.
Rather than I come to your room, and sometimes this hotel, I'm in 3rd floor, you're in 2nd floor. We are not able to get all floor together. But in Airbnb, they all are in the same space. So I think one strategy that major hotels should begin to think about is building a hotel in the mood of having an Airbnb like it's done in international. If you go to Dubai, you go to Doha.
Are you saying that should be like a product vertical? Should they have their own Airbnbs, or the same hotel should be converted?
No, they can have it.
They can have Airbnb.
You see, the beauty about places like UAE and Qatar is that they build their hotels in those structures already. Already.
No,
you understand?
Yeah.
So, but ours has always been the normal hotel. Because their own was like that. We're talking about the December. If you want to take that, you now begin to see that it's now a tourist attraction. Yeah. So tourists likes being together.
Yeah.
You get?
Yeah.
So Dubai hotels are normally built for tourists.
Okay.
Yeah, I think before we go to that, into that, based on what Mokta and Chike said, I think if you look at that sector, I liken it to the agro-allied and the cement sector. And this is another important sector, because if you look at the gross profit margin, and this one with AMB you just mentioned, I see it as more like an outlook that can even boost that margin.
Very true.
Because if a company is doing 79% gross margin, that is impressive.
Very, very.
And that is what Transcorp is doing. That means the revenue, if you compare the revenue with the cost of the direct sales, you can see that they are very, very comfortable. Even at 34% pre-tax profit, it's very, very comfortable. So they have that leverage. And it is short. They are stock worthy to be considered, whether undervalued or overvalued, because yes, they can generate money, they can generate cash.
Yeah,
it's not as if I'm marketing them, but I'm
very
just telling you the fact.
But you are saying that DK talk about. I mean, is it Frank talk about the PE ratio?
Yes,
the PE ratio for Transcorp, which is about 91.
91. That is high. That is high. That's more than a red flag.
that is high, no doubt. But it could equally be that investors.
You have come without your future now. You have tried the future. It's the present that determines the future, Nika.
Well,
if you are beginning to buy a product by the future, am I going to live in the future that I don't know?
Yeah, no, of course. Okay, let us break it down. Of course, Mokta, if I know that you have money, you have enough money to meet your needs, of course, I'll give you a good valuation.
Yeah, that's right.
That is just the thing. If I know you have money, you have good money in your bank account, of course, I'll value you. I'll give you a good valuation. That's only what is happening.
All right, all share index. Let's just brush through this. I know the man in blue. Okay, the man in deep blue doesn't like the all share index. He says it's none of his business. But yes. So what's happening?
But it cannot be without the all share index.
Of course, I've said it. It's a barometer to measure my portfolio at the end of the day.
Yes.
So any of my portfolio that is not being up to 40%.
It's the benchmark.
Yeah,
it's not 40%.
So it's not doing well.
You build your portfolio against that benchmark.
So that is not doing well.
It's not doing very well. It's not doing well.
I will go and reevaluate my portfolio.
So if your portfolio is not doing better than the benchmark, it's not doing very well, and you're not a good manager.
And if a company is not doing better than the benchmark, what's happening?
It's not doing well. Most of these companies are doing very well.
I think for me, the L-share index,
market capitalization.
Like I always say, the L-share index is a barometer, and sometimes also is that index that attracts foreign investors into your market because they are looking at the average return.
Yeah.
So it's a good index, especially for the Nigerian government that are looking for FX. Just yesterday, the governor of Central Bank was saying that foreign reserve have gone as high 7 years high, and this is not driven by crude oil sales because if you look at crude oil sales is still low. If you look at
$64 per barrel.
Yes, I mean $64 per barrel compared to $75 oil benchmark.
Yeah.
And also if you look at crude oil output, oil benchmark of 2.03 million barrel per day to struggling to meet OPEC quota of OPEC quota. We are not even meeting it 1.5. We are even 1.3.
Yeah.
So you realize that the L-share index have attracted investors into the market, foreign investors especially. They have brought in those effects and they've been able to guide against.
And apart from that, Mukhtar, why it is important that you should consider the L-share index? You know, when you want to get your cost of equity, you use that benchmark.
True.
In maybe technically when you are using capital asset pricing method, you have to use that. So it's very, very important.
Yeah.
But let's look at the L-share index, which is very, very important when you want to measure whatever you.
On a final note, I would just love us to just touch a little bit, two seconds. Inflation, 16%. And it's down from 18% in September, now 16.05% in the month of October. A lot of conversations around that. But I don't want us to go into the real economy. Let's talk about the equities market. Do you think this will have a massive impact in equities? One sentence. Let me
just give you my own one sentence.
All right.
Let me give you one sentence. You know, the issue of inflation, you know, you have nominal return, you have real return. I will just mention that.
Yes, please.
Nominal return and real return. Now, with the nominal return coming down, with inflation coming down, that narrows the gap between nominal return and real return. This is 16%. So, basically, any whether it is your portfolio or any asset that is giving you return less than that 16%, you are losing money.
You are losing money.
Now the thing has come down from 18. So you have Mukhtar has an opportunity now. Say, okay, if that was an asset, he maybe he's in love with, he has invested, and the asset was giving him 18%. Do you get the point? And now inflation has gone down to 16%. So he can easily sit down and relax. Okay, fine. No, technically, I'm not losing money because he has gone down to 16%.
Me as an example. But let me say that in 2 seconds.
Yeah.
Why I'm not a fan of the current inflationary figure is because you have to tell me, well, is it rebasing inflation or reinflation?
So it's
if rebasing inflation,
it's rebasing inflation.
So I will not use that as a guide to reinflation or pressures. That's my personal opinion.
Yeah, I love that perspective. How about you, Chike? What do you think? Inflation, equities market, relationship? One sentence?
My own take is, does it allow investors to have more disposable income to be able to, use in the equities market?
And it doesn't.
So,
no, but the food prices dropped. It dropped.
Year to year.
Which is year to year, but month to month. I bet whether year to year or month to month.
Year to year,
we are seeing it in the market.
Year to year, we did not rebase.
Yeah,
exactly.
That's why yes, like year to year, we did not rebase.
Yes,
we did not rebase. But it's not
month to month. Now
but it's not aggressive. It's not more aggressive.
One thing I was saying right from the time we started this whole rebasing thing is that let's have rebasing GDP and normal GDP. What was the previous GDP we had? I said, sorry, the previous inflation we had and rebased inflation. So we're able to know what is really happening in the economy, whether we're experiencing improvements or perhaps maybe it's just figures that are being manipulated. I don't want to put it that way. Anyways, that is how we round off this episode of Market Watch. We do this every Mondays and Wednesdays where we have conversations around issues bedeviling the market, especially the capital market. So if there's anything I'm going to leave you with as an investor, make sure you stay informed. Make sure you do your own research before investing in any asset class, and keep contributing your quarter in building your personal wealth. See you on the next one. Cheers.